Bill H.R. 2139 as amended.
The clerk will report the title of the bill.
Union Calendar Number 125, H.R. 2139, a bill to modernize the Manufactured Housing Loan Insurance Program under Title I of the National Housing Act.
Pursuant to the rule, the gentleman from Indiana, Mr. Donnelly, and the gentlewoman from Florida, Ms. Brownwaite, will each control 20 minutes. The chair recognizes the gentleman from Indiana.
Mr. Speaker, I ask unanimous consent that all members may have 5 legislative days within which to revise and extend their remarks on this legislation and to insert extraneous material thereon.
Without objection, so ruled.
Mr. Speaker, I yield myself such time as I may consume.
Gentleman's recognized.
The FHA Manufactured Housing Loan Modernization Act of 2007, which I introduced with my colleagues, Chairman Frank, Mr. Teaberry, and Mr. Feeney, includes important provisions that will help revitalize the manufactured housing industry, which plays a critical role in helping Americans achieve the dream of home ownership by providing them with alternative opportunities for affordable housing. This bill passed the Financial Services Committee unanimously on May 28, 2007. This $8 billion a year industry provides jobs for people not only in the 2nd District of Indiana, but throughout the country. These homes house 22 million people in over 10.5 million homes. Mr. Speaker, I have seen firsthand in my own district how these homes have continued a tradition of quality and safe construction over many years. They present a high-quality, affordable housing opportunity for American families. H.R. 2139 would raise the manufactured housing Title I loan limits and annually index them for inflation. It will also give HUD the authority to increase insurance premiums and improve underwriting standards in order to make sure that the program is actuarially sound. We have a proud and strong tradition in Elkhart and in other Indiana communities to provide first-class housing for Americans, providing quality jobs for Hoosiers at the same time. It is part of who we are. In turn, these communities are extraordinarily proud of the role they play and that we play in our district in providing housing for American homebuyers. Unfortunately, Title I loan limits have not been adjusted for inflation since 1992, and the manufactured housing industry has experienced a major decline since that time. In 1992, in the midst of the last downturn, FHA insured 30,000 Title I loans. In 2006, that number was less than 1,500. In Indiana alone, that number went from 377 loans in 1992 to only 4 last year. These are more than just numbers. They represent a serious drop in a crucial component of affordable home ownership for Americans. This not only affects low and moderate income families that these loans are designed to help, but it affects the manufactured housing industry and the housing market as a whole. Because of the drastic reduction in FHA Title I loans, American families are left to struggle to try and find adequate financing options for their manufactured home purchases. This body has a responsibility to try and provide affordable housing options for American families, and this legislation does just that. As you know, Mr. Speaker, June is Home Ownership Month, and it is only fitting that we pass this much-needed legislation. Today, I urge all my colleagues to support H.R. 2139 to strengthen the American housing market and to put more affordable housing opportunities within reach for American families. Mr. Speaker, I reserve the balance of my time.